Hello, good morning or good evening, traders. Welcome back. This video, as you can see, I am making to really give you guys a guide as to how I trade during volatile markets. They're a whole different beast and they need to be treated as a different type of beast. They need to be adapted to. You cannot trade the same in a volatile market as you do in a non-volatile market in a steady uptrend, as I'm sure you've learned within the last week if you did not already know that. So I'm going to kind of go through some of my own techniques that I use, some of my rules that I use, because I really change my trading strategy based on the amount of volatility that is currently in the market. And before I get started, I just want to do a little self-promo here. If you have been watching my videos and you like the way I trade, or if you enjoy this video after it's done, I am doing a promotion within my Discord group. There is a link down in the description, and here is the promotion right here. We are offering 33% off for 2 weeks of our membership, just because we know that this is a difficult time. And we want newer traders to be able to come into our group during a period like this and see how we trade. People that have been doing this many years, we want you guys to see how we trade. We have over a 90% success rate this last few weeks since the market has gotten volatile, and we have just been absolutely killing this year. We have been just doing amazing. So if you guys do like the video, if you guys like the way I trade and you want to trade with me live, we have live voice chat, live signals, and we are here to educate you and help you through any trades that you're taking yourself. We are always here to help our members, and that's something that really I think sets us apart from a lot of other groups. We're here to give you the entries and exits, but we're also here to make you a better trader, and those who seek us out can definitely confirm that we are here to help our members. So if you're interested in this after the video, please click on the Discord link in my bio and hit up either me, Daddy Mo, or Baby Analyst and ask us about this promotion. If you come from this YouTube video, you can get the promotion no matter when you come. Okay, I'll give that offer to you. So $50 for 2 weeks, and if you don't like us, then that's fine, but we feel that this is going to give you the eyes, the ability to see the eyes of very good traders that know how to trade in volatile markets. They know what it takes. Okay, so with that being said, let's get into it. I'm going to go over 2 examples of trades that I would take and kind of how I go about creating those trades. First of all, in a volatile market, you need to have your levels marked, as always. You need to kind of widen them a bit, right? Obviously, price is going to move a lot more, so you need to find the important levels. First of all, I'm going to start on a daily chart. There are certain times where you want Fibonacci extensions. So here's an example that I'm going to use because this is how price has been acting. We put in a low. You immediately, when you see the low, you see a potential reversal that you draw Fibonacci retracements from the high down to the low, and that gives you retracement levels on the way up. These can often act very important as price is chopping around in here, and it gives you some sort of direction intraday. Okay. From there, I go ahead and I move down. I shouldn't say that. On the daily, I also want to draw any open gaps. So I actually have one here that's not marked. Price closes up here, gaps down, and price has not come back up to fill where the price closed. So I'm going to go ahead and mark a level up there. You can see I have this gap marked. I've had these other gaps marked from when they closed. Okay. So that's kind of one of the other things you want to do on the daily chart. And then I'm going to move down to an hourly, and this is where I mark most of my levels. From here, you really just want to look at any bands of resistance or support, so anything that you can draw a zone around. So for this one, I saw 2 pivots here, and I simply draw a zone around. There's another pivot here, so I just kind of draw a general zone, knowing that price is likely to be rejected around this point. If it does get and close above hourly, then perhaps it's going to go higher. Down here, I have a zone at this area. We can see price closed in this area. Price had pivots in this area. Price broke through this area and struggled in this area on this hourly candle. And we can see a few other times that price came down to this area and was struggling. So I've drawn another zone there. These other red lines are simply price levels where I've seen that price can come and be rejected or find support. And also you want to pay attention to candle closes, right? A lot of the time. So you'll see a lot of my lines are not actually on the end of a candle, like right here it is, but many times I will draw them where the candles actually close, the highest close they get, because that can often be important as well. So that's kind of how I go about finding my levels. This bottom level here, I just looked a little deeper and I see this candle finds support, this candle closes on it, and so I'm seeing there's definitely some sort of importance at that level. It might not be as big, but you can see the market actually came and made a low at that level on Friday last week. So it takes a little bit of art form. You can go watch my video on finding important levels, finding supports and resistances. I go over it in more detail. So from there, here is kind of the strategy. I'm going to bring this down. Here is the kind of 4-chart strategy that I use while I'm day trading in a volatile market. First of all, I rarely swing, mainly because the swings that you can see in volatile markets, they just rip swing traders apart. You have to play very far out. It's going to be more expensive because volatility is high, and it's just, trust me, it's just a lot easier to day trade in this market. So that's kind of my first rule. I don't really swing in this market. It's just not for me, and I don't think it's really needed. So this is the kind of 4-chart system I use. I use a daily chart so I can see important daily levels. I use an hourly chart. Sometimes I switch this to a 30-minute chart as well. I use a 15-minute chart with my after hours turned on so I can keep in mind the pre-market levels that have been created each day. That kind of gives me an idea of what the range is for the current day. And if it breaks out of these pre-market levels, then I look to my daily chart and I'm looking, okay, well, where's the next support or resistance? Or I look at my hourly chart and I say, okay, well, where is it going? Is there a gap close by? Is there a resistance that I've made that's close by? This top chart, it's a tick chart. It's a 512 tick chart. So you can go here to time frame if you're on Thinkorswim, and instead of time, you just click on tick, and there's a few different options here. Tick charts simply create one candle for every amount of orders that you have selected. So this will create one candle for every 512 orders on the SPY. This chart is important for volatile day trading because you get precision entries, right? You can see very small patterns. It's similar kind of to a 1 minute, but I like it better because it just shows order speed and order flow a little bit better as you're live during the day, and you see the tick chart make a move, and you see candles coming in quick succession within maybe 10-15 seconds. You know there's many orders being put into that move, and so it kind of gives you a good idea about the greed or the fear of the market at the current state. So one example, I'm just going to go over the last trading day, Friday. We're going to look at a trade that I actually took during this day, and going to kind of go over why I would have taken that. So first of all, on the daily chart, I know that we have come up and we have tested a 50% retrace of our down move. Okay, that's great, and we rejected. So I see that as a bit more bearish, right? A bit more bearish. We came back and tried to make another test to get up to maybe the 61%. But again, Thursday, we failed. So this is kind of all in my head as we head into Friday. Friday, the first thing we see is a gap down, okay? A gap down, and I have my zone that I've created, as you can see, and we've also gapped under another fib level, and that just happens to be the top of my zone. So right away, if the market's gapping down, I'm going to say, okay, well, I know there's support down in this area. We've seen buys off this area, so I'm going to be a little hesitant, right? But I know also that actually on my hourly chart, I had a trend line drawn of the intermediate trend, and this kind of gives you an idea of, can I shift my short-term sentiment to be bearish, or are we holding the trend? Should I stay bullish, right, until we break that? Well, Thursday, you can see here we broke resistance, resistance, and a gap down. So immediately, I'm a little bit more bearish. I know that we have support down in this area, but I think price will probably want to go test the lows again. You can see it didn't quite get all the way to the lows, but immediately I'm a little bit bearish. I'm a little bit skeptic of going long on the market because of my larger time frame sentiment. Okay, so then hourly and 15-minute I use to really give me a good intraday picture of where the market might be headed. I see the market in the first hour. By the way, another tip, be very hesitant to trade the first hour in these markets. There can be a lot of fake outs. It's definitely not for the weak-minded to trade the first hour of this market. It's very difficult, a lot of whipping around. Most people say it's choppy, but it may be choppy to some, but if you know what you're looking for, it's not as choppy. So going on with what I'm saying, we get to the top of the zone, and at this point, I'm looking for any sign or signal that the market is either going to break up, which would mean it's probably going to fill where it closed yesterday. It's going to fill that gap. Or I'm looking for any sign of rejection. And remember, I'm a little bit bearish because we broke the short-term trend. And I think we may go retest these lows. We didn't get to the 61. We only got to the 50% retrace, so that's a bit more bearish. So immediately, I'm looking for any type of bearish signal. And here on the 15-minute chart is where we get it. We get the breakup of the opening range right here. But then we get this indecision candle, and following it is a breakdown confirmation candle. So you get a reversal candle where technically you could put on some sort of size on the downside right here and then add on as you get confirmation. I personally didn't. I was just watching. I saw the confirmation candle closed at the lows, and I really, really liked that. And it was very nice looking to me. So at this point, what I do is I go down to my tick chart, and I'm looking for a precision entry on the downside at this point. Here is the area right here where this breakdown candle was created, right around here. And then we start getting some consolidation. And I'm looking for any type of short entry. And as it's coming into this area, I see right here, we're coming up to a level, and I'm saying, okay, well, I know this is an important level. And right here, I notice price is respecting that level and rejects. And so this is where I really hone in and start looking for a short side setup, a short side entry on my tick chart. I first see that there's a trend being built. There's now 3 touches at this point. And I also see that we've made a high here and a low. We've made a head, right? And we've come and made about an equal low. And I'm watching on the retrace back up to this area here if we are being rejected. So what I did here is I enter a partial position right at the top here because I want a good entry, right? And I can simply have my stop loss above these highs. That's what, a 20 cent, 30 cent stop loss. That's incredibly close. So I have a perfect entry just from looking at tick chart patterns here. Now, because we have a nice uptrend line, I'm looking for a bearish setup. I can now add on to my position as this trend line breaks. So we've got 4 touches, 5 touches here. It keeps touching and holding, and boom, we have the break. So this is where I would be entering the second part of my position as the chart tells me that I am right about my trade. This will boost your win percentage. And so I've added in here, my stop loss remains above the last swing high. Don't have a stop loss that is going to get taken out by this candle. You need to have semi-wide stops. But using a tick chart allows you to keep them pretty close, right? I don't have to wait for a 15-minute close above the highs. I'm simply just waiting for a tick candle close, which can happen in 10 seconds. So it makes your stops a lot more quick. It makes your entries more quick. Tick charts are really essential. And just based on the previous levels I've drawn, I have a first target here. And then another target you can have, you can simply use previous levels from the day, right? If you want to just take partial profit at, say, this pivot here, you enter partial up here, partial here, and you say, okay, well, when it gets down 50 cents, I'm going to take half of my position off, and it's going to be risk-free. And then you get down to your final level here, and boom, you're out, and you've just got a $1.20-30 drop, and you had about 30 or 40 cents of risk on the upside. That's about a 4 or 5 to 1 risk to reward ratio. That's very good. And as we can see, if you ended up holding any, you actually got your next level, which was, probably a 9 or 10 to 1 risk to reward ratio trade. Incredible trade that we took on the SPY, and that's kind of how I executed. Okay, we're going to look at one more here. This one's really, really simple. On this one, I simply was looking at a longer term chart of Facebook here, and I saw this zone where we came up, rejected, got above, support, support, support. So incredibly important long-term zone on Facebook. And as the market was coming in to a potential double bottom area, I noticed that Facebook was also at this incredibly important area, and I figured it was possible for Facebook to see some support. This is kind of how I analyzed, and this play was actually, I was looking at the end of the day at this play. I actually didn't take this play, but it would have been very good. I'm a little disappointed I didn't, but I wasn't really trading the end of the day, but nevertheless, it's a great learning opportunity. So on the hourly chart, the first thing I notice as the day is going on is the first candle of the day is a breakup candle straight off the zone, and it has pretty high volume. And then the volume completely dies off as the market sells off. So that's interesting to me, and that's definitely noted. The same thing happened on the SPY, and that's why I ended up getting out of my shorts early. I didn't see volume confirming the move. And so Facebook, we see the same thing. The volume's not really confirming the move on the hourly chart as we're moving down. So at the end of the day, I can be looking for some sort of signal to be entering a trade on Facebook. And if we simply draw some downtrend lines, right, we can look for a trend break. And so there's going to be our downtrend line. And I'm drawing these from the candle close to candle close to candle close. And boom, even though this doesn't look like a breakup here, this actually breaks trend because it closes above that line. And so that gives us an area where we can start looking on a tick chart for an entry. So this candle ends at 12:30. So that's going to be right here. And boom, at 12:30, you can see after that trend line breaks, look at that massive breakup, right? And so here's what I'm seeing on this tick chart. You've got a bit of a head and shoulders. So here's your head right here, and you've got a shoulder here, you've got a shoulder built here, and then we're looking at Facebook as it's breaking up. And I say, well, if it's going to keep making these head and shoulders, right, we've got head, shoulder, shoulder. Where's the next shoulder going to be? It's going to be here. So if it's going to keep making this pattern, we're going to want to look around this level here, around the top of the box, for a potential entry. And so we can simply get in on this retest. We'd simply just buy the dip, and our stop loss you can either place below this breakup candle, or if you want a wider stop, you can place it below the low. So let's say we use the first stop. We're entering at 178, and our stop loss is around 177. Let's give it, so that's $1 stop loss. And then you just look at levels on the tick chart that were important earlier in the day as profit targets. So we can see this level right around there had many touches, many touches. So that can be our first target. That's 178 up to about 180, let's call it. So that's a $2 profit on our first target. And our stop loss was $1 away, so that's already a 2-to-1 trade. And we can see our other important level is right around there. We had a touch, a failed breakout, and back below. So that's our next level, and that's a whole another $2 away. So that is $4 for $1 of risk, and that's your trade. It is the end of the day. I don't expect really to be taking trades at the end of the day. That's why I didn't take it. But nevertheless, it was a good setup. Setup was there. And all this analysis on the hourly volume, on the daily, finding this zone, keeping the sentiment in your mind, waiting for a break, and then finding the perfect entry on a tick chart. It's all a game of patience, guys. It's all a game of patience. Can you wait for that perfect opportunity? There's a reason that we have 90% success rate for the year. There's a reason that we have members making thousands of dollars within 5 minutes on trades like this over and over and over again. It's because we have the patience to say no to 90% of setups. To 90% of things that members ask us, we say no. Because we know what it takes to keep a good win percentage. We know what good trade looks like. And so these are two examples of great trades that you could have taken on Friday, and that's kind of how I would have gone about looking at them and finding them. So that's really going to be it. Again, guys, don't forget that Discord link is down there. Huge sale going on. If you guys are interested, please like it and sub and share, and that's going to be it. All right. Have a good one. Peace.